Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at some of the top stock picks from Bank of America for Q1 of this year. So let's get into it. All right, guys, welcome back and thank you so much for being here. Recently, the Bank of America released their quarterly list of the top 8 stocks to buy in the first quarter. Now, they say that these are high conviction investment ideas that have market moving catalysts coming within the next 3 months. Now, with that being said, I did not agree with all 8 of their picks. So I'm going to show you 4 of the stocks that I strongly agree with, and then 2 that could maybe go on a watch list for now. And just before we get into all of those companies, this is just your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and let us know your thoughts in the comments down below. Also, don't forget to check out some of the links in the description. This includes my Patreon page, which will get you access to our Discord chat group, plus links to some of my favorite resources like TipRanks. Now, TipRank's free website has a ton of useful information, but if you are looking to upgrade to the premium or ultimate plan, make sure you use that link down below to let them know that I sent you. All right, now let's get into those first 4 companies that could be strong buys for this first quarter. The first company we're going to look at today is Citigroup. They trade under the ticker C and are currently at $64.23 per share. Now, they are still down a good bit from their 52-week high of over $80. Taking a look at TipRanks, we have 15 current analyst ratings. And the Citigroup stock comes in as a strong buy with 13 buy ratings and just 2 holds. Now, the average price target is just shy of $75 per share for over a 16% potential upside. As far as upcoming catalysts, analyst Erica Najarian says Citigroup is particularly attractive value stock within an already undervalued financial sector that is poised to outperform in 2021. Bank of America is projecting both a macroeconomic rebound and a rebound in 10-year Treasury yields to 1.5% in the second half of 2021, both of which are bullish for Citigroup. Now, the stock is priced at just 85% of tangible book value, which Najarian says doesn't reflect its potential for roughly 10% normalized return on tangible common equity. Down at the bottom here with our TipRanks Premium, we can see the most recent analyst ratings, and we have 4 buy ratings within this last week. The highest price target comes from Chris at Oppenheimer with a $111 price target for nearly a 73% potential upside over this next year. The second company is ServiceNow, and they are a software company that develops a cloud computing platform. They trade under the ticker NOW and are currently at $513.76 per share. And yes, I know that that is a more expensive stock price, but don't forget, with a lot of platforms now, you are able to do fractional shares, so you don't have to purchase an entire share of this. Now, there are 23 analysts with current ratings on the ServiceNow stock, and it comes in as a strong buy with 22 buy ratings and just 1 hold. The average price target is nearly $600 per share for over a 16% potential upside. ServiceNow specializes in software as a service applications focused on automating business processes and workflows. Analyst Brad Sills says ServiceNow is a top pick within the large cap software group. He says the company's installed mid and large size enterprise customers, its roughly 4,600 sales and marketing personnel, and its robust suite of workflow automation offerings differentiate ServiceNow from its competitors. Sills is projecting long-term annual revenue growth of at least 25% and says the company has an opportunity to grow margins and free cash flow over time. As I mentioned before, there are quite a few current analyst ratings on the Now stock. And the great thing about our detailed list of analyst forecasts is that we can see a ton of 5-star analyst ratings on this company. On the high end, there are a few targets at $650 for the Now stock, which would be over a 26% potential upside. And the highest is $662 from Morgan Stanley, which would be almost 29% over the next year. The third company on our list is T-Mobile. They trade under the ticker TMUS and are currently at $127.28 per share. And there are currently 17 analyst ratings on the T-Mobile stock. It comes in as a strong buy with 15 buys and 2 holds. The average price target is about $147 for just shy of a 16% potential upside. Now, the acquisition of Sprint made T-Mobile a legitimate contender against U.S. telecom giants like AT&T and Verizon. Analyst David Barden says T-Mobile will likely update investors on its Sprint synergy targets either during its fourth quarter earnings call or its Analyst Day event, likely in February. In addition, Barden says investors should watch for management commentary on long-term subscriber growth and their 5G strategy. He says the company's Analyst Day will likely be the biggest catalyst for the stock in the first quarter. The highest price target is at $172 per share for about a 35% potential upside. And the fourth company is Raytheon Technologies, which is actually the largest aerospace and defense manufacturer in the world. They trade under the ticker RTX and are currently at $69.20 per share. There are 9 current analyst ratings on the stock, and it comes in as a strong buy, with 8 buy ratings and 1 hold. The average price target is just over $80 per share for almost a 17% potential upside. Analyst Ronald Epstein is projecting mid-single-digit annual revenue growth for the defense giant Raytheon. He says Raytheon should outpace U.S. defense spending growth and generate dependable free cash flow for investors. Epstein says the company's high-quality aerospace business is well-positioned to benefit from widespread coronavirus vaccinations and a rebound in air traffic starting in the first quarter. Raytheon also has an opportunity for earnings multiple expansion as the economy recovers from the downturn and airline maintenance demand could rebound in early 2021. Taking a look at our detailed list of analyst forecasts, the highest price target comes from 5-star analyst Miles Walton from UBS, who rates the stock a buy with a $90 price target for over a 30% potential upside over the next 12 months. So those are the 4 companies from the list that myself and analysts agree could look like strong buys for this upcoming quarter. Now, the next 2 definitely come in as more moderate buys, so I'm still going to share as they might just be good ones to have on the watch list for now. And the first company is going to be Footlocker. Trading under the ticker FL, they're currently at $47.85 per share. Coming in at a moderate buy with 10 buy ratings, 5 holds, and 1 sell, the average price target is about $44 and is actually a potential downside from the current price. But analyst Robert Ohms says Footlocker is a play on the strong performance of the Nike product portfolio at a sharp valuation discount to Nike shares. Now, Nike is making strategic exit from stores such as JCPenney, Belk, and Dillard's, which should create gross margin tailwinds for Footlocker as a key Nike strategic partner. In fact, Ohms said 70% of Footlocker stores are located within 2 miles of a competing store that is either closing or Nike is exiting. Now, as I said, the analyst reviews on this one are a bit more mixed, and a lot of the buy ratings haven't been updated for a couple months, so their price targets are actually below Footlocker's current price. But if we look at our most recent price targets, one that was just updated yesterday, those are coming in at about $58 for a price target, which would be an upside of about 21%. And the next company is Tapestry. Now, this is the parent company of some popular brands like Coach and Kate Spade. They trade under the ticker TPR and are currently at $33.62 per share. They also come in as a moderate buy with 10 buy ratings and 6 holds. The average price target is $31.80, which is about a 5% potential downside. So Tapestry is a specialty, affordable luxury product retailer, and analyst Lorraine Hutchison says that Tapestry surprisingly recovered sales and expanded margins in a difficult retail environment in 2020. She says Coach and Kate Spade are excellent economic reopening plays in 2021. Handbag sales are highly exposed to vacations, weddings, and in-office work, all of which should rebound this year. Hutchinson is projecting Tapestry will build upon its pre-crisis margins once the economic recovery hits full stride. Now, we do have a good mix of negative price targets and some positive, but the most recent price updates, which in the last month have ranged between $35 to $40 per share for an upside close to 19% over the next year. So there we have 4 stocks with strong buy ratings and some nice upside potential, plus 2 that come in as moderate buys that could be worth keeping an eye on. Now, you guys know that I always love hearing from you, so make sure to leave your thoughts on these companies down in the comments below. What do you think of these ones, and what others are on your watch list for the first quarter here of 2021? Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant to bring some new companies to your attention and for information and entertainment purposes. Any investment decision needs to be made based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful weekend, and cheers.